Hello and welcome to New Wave, your go-to resource about climate investing in Europe. Today I'm joined by Johnny Everett, co-founder at Marble, Yair Arim, general partner at Extensia, and Matthew Blaine, principal advisor at Ventures. And in this episode, we break down the AI for manufacturing investment thesis. We unpack the latest financing round from Aris Machina, a company started by two former Northvolt leaders, and we explore how AI is reshaping modern manufacturing and why climate VCs are starting to pay attention. Before we jump in, don't forget to subscribe on YouTube or to follow us on Apple Podcasts and Spotify. There's also a newsletter that I write every week about all of the news in climate tech in Europe. Feel free to subscribe to this one. New episodes of New Wave drop every Friday at 9 a.m. CET. All right, let's get into it. Thank you so much for joining me again this week on New Wave. Exciting topic today. We'll talk about AI for manufacturing. There was one big news last week with former Northvolt employees and leaders that launched Aris Machina. Big pre-seed round. Johnny, want to kick us off with a bit of context around Aris Machina?
Sure, I will try and do my best. As you said, Aris founded by two ex-Northvolt veterans. So Siddharth Kular, hopefully I'm not butchering his name, who was leading a lot of the software and AI piece at Northvolt, ex-Apple, if I'm not mistaken, before that. And also critically, Peter Carlsson, who, as we all know, was the founder and CEO of Northvolt. So these are two people who've been in the space and around the space for a long time. What are they doing with Aris? Well, they're trying to build this kind of agentic OS that sits across the manufacturing process. And why I think that's new or interesting is their ambition is to try and create global maxima across the entire manufacturing chain rather than, for example, local minima at each stage step. But to do that, they're going to have to solve one of the challenges within this manufacturing space, which is all the disparate and different data sets that's being generated by all these different processes, machines, etc. This is something we talk about in like ontology of AI, like creating a unified view of this kind of system in order to then be able to optimize it. Initially, if I understand well, they're focusing on two main areas. They're looking at the R&D side with a package called Protos, looking at accelerating R&D, and then a process on the Gemba, they're calling it, GEMBA, on the manufacturing side, which is actually looking at the real-time process optimization, waste reduction, yield improvement, et cetera, et cetera. And as you said, Hugo, they just announced a huge pre-seed round, we'll say in air quotes, of 9.2 million. Led by Early Bird, Village Global, ANU, Planet A, and Snow also participating. This was also one of a few pre-seed rounds announced in this space in the last week. So Forgis also announced 3.8 million round, and Drift, DRYFT, announced a 5 million round. So safe to say there's a lot of people looking to place their bets in the manufacturing AI space.
Yeah, I think there's a pretty clear journey to what we're seeing in the market. This is actually a problem that I worked on in a past life at about 2016, 2017. That's the problem of vast amounts of data coming out of a broad range of systems and sensors in manufacturing, all in different formats. All of that equipment is produced by different OEMs. It follows different data protocols, and typically manufacturers have historically not been super software enabled or super comfortable hiring top software talent to make good use of that data. So a lot of it just kind of gets stored and abandoned. And I think the industry has recognized the opportunity to do more with that for a long time. But given the heterogeneity of the manufacturing landscape, where every manufacturer is totally different, you have a different combination of systems, they've typically pursued consulting and advisory projects to provide kind of bespoke solutions to that problem. I think the reason we're seeing a plethora of companies come through on both sides of the Atlantic solving this problem can be traced back to LLMs hitting the market in a meaningful way with GPT-3. I think in addition to the heterogeneity of the data landscape, well, following on from that, the major problem's always been data cleaning, putting that in a usable format, and LLMs have changed the paradigm in making that easy. So now that you can clean that data, there's a lot of companies who kind of embedding LLM technology in the tech stack, then put it into advanced analytics and then increasingly agentic workflows on top. Something that we've invested in with a company called Ali, based in Mexico, focused on food and beverage manufacturing. And the impact that you can make is really quite extraordinary for the context. That team, from their early deployments, reduced downtime with food and beverage manufacturers by about 15%, which is absolutely huge. And overall equipment effectiveness, which is essentially a measure of efficiency, goes up by about 18%. So that gives you some taste of the kind of impact that these companies can have. So with Aris, we've a little bit more focused on advanced manufacturing, initially batteries. So we're excited to see what they can do as well.
And is that the case, Matthew? Basically, like, we're doing a business case based on like cost saving and like equipment usage, right? Like that's how you build such a company.
Yeah, essentially, it all comes down to the unit economics. And for manufacturers, they care about productivity. They care about, and below that, they care about things like downtime, equipment effectiveness, wastage, and crucially, these technologies need to be deployable without interruption to their current operations. That's something that manufacturers are pretty allergic to. And again, it's something that I think has changed over the last few years with with off-the-shelf hardware. You can basically plug it into. I mean, but some factories are already storing the data on the cloud, in which case, just through API connections, you can ingest the data you need to in these tools. For others, they're very simple off-the-shelf hardware tools that upload data from factory lines into the cloud, which makes deployment much faster than it has been historically, where you might be talking about, again, a multi-year consultancy project with potentially hundreds of consultants building something bespoke, grappling with each of these systems and doing something completely different for each customer. We're seeing a productization of that today with rapid deployment times and much faster time to value.
Just to add maybe, well, there's a pause to illustrate Matthew's point that on the scale of this problem, which is ubiquitous across most manufacturing areas, right? We're talking about roughly like 20% of all manufacturing spend being lost to process inefficiency of some form. So like if we think manufacturing is like a $40 trillion roughly industry globally, you're talking about like $8 trillion in waste or inefficiency. Through various different issues, depending on what the plant is doing, obviously. But I think that's the scale of the kind of problem we're talking about. So yeah, there's a lot to be done in this space, I think, for sure.
Yeah, I mean, looking at specifically the case for Aris Machina, I think there is a study that said like on battery specifically, which is their first use case, about 10 to 30% of all batteries produced end up thrown away, basically. And that's about like 1 million burned every day for 40 gigawatt plants. So obviously that makes a good case for like someone that can optimize all of that.
I would actually challenge this one. Sorry, Hugo. I think this is maybe the numbers that worse numbers that Northvolt had, but this is not the case for CATL. CATL is no longer doing 6 sigma. Yeah, they are doing that is errors in the millions. They are doing now 9 sigma, which is error per billion units. So basically 0 fault rate. So I think that maybe in the West, but in the East, this problem is solved.
So would you say that basically in Asia, people have had like a Aris Machina in a much better scale for like all of the big battery manufacturers? Is that what you're saying, yeah?
I'm saying that for battery manufacturing, I think in China, I've seen firsthand that this is solved.
So yeah. Would you not have invested in Aris then?
Since it's live.
Okay.
Look, I think it's interesting, but Johnny, you said yourself, right? The same week we had two other companies. If you look at the other past year, there is June AI that raised from Kleiner Perkins. There is Ronia Tech that raised from others, yeah. And if you look at the industry 4.0, this is nothing new. I mean, improving manufacturing is already there for 15 years. The number of preventive maintenance companies out there is just enormous. Therefore, I don't see it as anything new, but now people come with agentic AI and apply that also to manufacturing.
But I mean, I think on the battery point and your China trip, I'm not going to obviously disagree with what you saw there for sure, and maybe those numbers are related to the West. So what I mean, our take, let's say, on this is more around the specialization of each of these tool sets. And I think this is an important question. It's like, do you actually need a company for every manufacturing process? Like, are these distinct enough and different enough and difficult enough that you need a company for every manufacturing process, like food and beverage, textiles, batteries, whatever? Or even more so, do you actually need a deployment for every manufacturing plant? And I think that's also an open question, right? Is can you actually get to a place where for factory A, B, and C who are producing products, X, Y, and Z in industry, whatever, can you get to a homogeneous enough solution where you're not necessarily just doing, to Matthew's point, kind of, consulting in disguise on some level? And I don't think that's clear necessarily today.
So I'd love to jump in here. Firstly, yeah, similar to Johnny, I wouldn't want to dispute what you've seen in China, but I also think those numbers are different to what we have seen from our companies selling into those companies. So, for example, we invested in a metrology company for battery manufacturing called Sironopt, and based on their conversations with the tier ones in China, wastage within the battery production process is still around 3%. I can't tell you the number that equates to in terms of on a per number of unit basis, but wastage is still a huge issue. But when you extrapolate that 3% against the cost of the volumes going through these factories is very, very large. For context, a Northvolt, and this is fairly standard for a gigafactory, whether that's a Chinese gigafactory launching in Europe or whether that's Northvolt launching in Europe, wastage of 50 to 80% is normal in the first 2 years as you configure the production lines, which is its own separate problem that we can talk about on a separate podcast. But my understanding from those large corporates is that whilst China is way ahead in terms of quality on and consistency of battery production, it's not a solved problem. Secondly, when we look at all the companies that have popped up in this space, and we touched on Juna and Ronya there, I think there are definitely a couple of different buckets of company that we've seen on both sides of the Atlantic in the US and Europe. And I think you can break them down by product maturity. There's a number of different companies that are still relatively early, still working out which use cases they want to attack. And I think if you take Juna as an example, I haven't spoken for the team, but my understanding is they've focused on a specific process, specifically the melting process, which is applicable across multiple industries, but they want to optimize that and then expand to other processes. And then other companies, like the one we invested in, Ali, is a little bit more focused on a specific vertical and all of the processes you typically see within that. I think of the two, we feel the vertical specific one is stickier. If you optimize a specific process, there's a risk you deliver a lot of value as you optimize that step in the process early on. But after that, you're kind of dealing in 1% to 2% performance increments in the long term, which is difficult to justify a kind of high ACV in the long term. Whilst if you are more vertical specific, you can become ubiquitous in how that company operates their production line across multiple processes and potentially other sides of the operations more broadly. So I think there's different ways in which companies are attacking it, even within a crowded space. And I think a Juno, which is very process specific, compared to a Aris Machina, are very different. So you can segment within this crowd of companies. And then the third one, I think, in terms of do you need this for every manufacturing process, it's very easy, particularly in the era of AI, to go, OpenAI can do anything, and you can solve all problems across all manufacturers if you just make Aris Machina generic enough. That's certainly not been our experience. As we touched on at the start of the podcast, manufacturers are incredibly heterogeneous, and whilst you are able to solve the data cleaning problem, there are many different elements of their operations in terms of who's actually using this, who's actually buying this, what specific problems they're trying to optimize for, that mean the industry is kind of naturally breaking out into this kind of vertical focused structure in terms of the market leaders that we see. So some of the companies that we would look at are companies like Sight Machine, Cognite, Alloys, Flowvision, Kerrigan. They all are focused on, some might be automotive, some might be heavy industry. In Aris Machina's example, it's advanced manufacturing with a strong R&D element, starting in battery manufacturing. I would expect that model to be the successful one, where companies are focused on that specific vertical and then expanding horizontally from there.
I think what's interesting about Aris Machina in that case is I think what they're trying to build is really the operating system. So like trying to connect all of the data points together, which means that from there you can actually expand to further industries. Like is that why people get excited?
Yeah, I think it's important to reflect that you can say you want to become the operating system for manufacturing and that therefore it is expandable across different types of manufacturing. But when you really zero in on a product level and the ambition to create really strong product market fit with your customers, to really serve the needs of your battery customers, there will be elements of the product that are optimized for the traditional flow of batteries from battery R&D to the production line, ongoing monitoring, perhaps after different processes to try and catch faults throughout the different phases that may be aligned to certain industries, but would be very, very different to, say, continuing with the food and beverage one, chicken processing, for example. And I think if you really want to unlock rapid product market fit, which is what you need to get to venture scale, I think that kind of broad brush, this is then going to apply to all manufacturing, is challenging for me to see. But I'd be curious in Yair and Johnny's take.
I think people are excited because of Peter, not because of whatever else is related.
I mean, I would on the Peter point, because that's something we haven't talked about. I just want to say that I think it's great that like Europe is backing a failed founder, because we have
100%.
a real issue with that culturally compared to the Americans. And I was thinking about this before the show. I was like, I wonder like how far would that go in the US? Like, I wouldn't be surprised like Elizabeth Holmes could raise money again from someone over there at some point. Like I think the line of failure for them is like very, very it's like a badge of honor, right? And so I think it's great that Peter is back. I think it's great he's back in the space. I think it's great he's been backed like strongly by some great investors in the space. And I think that's like a real European win, because there was a lot of negative talk around Northvolt, around the failure, around that collapse at the time. And I think it's fantastic that he's being, backed again and back in the same industry to hopefully add value there. On the market side of things, can it be one or many? I think ultimately any investor worth their salt, when they're making a bet in that company, is going to be wondering whether if they never leave that first market, can they still get to venture scale, right? So I'm pretty sure in the business case of manufacturing AI for X vertical, maybe you want to build some conviction that there's some repeatability, right? That food and beverage can go to cosmetics, to use Matthew's example. But I'm pretty sure that when they were running the numbers, they were looking at, can this get to venture scale if they never leave food and beverage, full stop? And so I think that whoever is leading this is also very interested in, clearly, I think, the first application. And for them, I would imagine they feel like there's a scalability there, at least in that vertical, that would allow them to get to venture scale. Because I think those market expansions are always, secondary and tertiary bets. I think most people want to see that the entry market that the company is going after, if they never leave that market, if they never successfully transition out, they would still be able to get to a venture scale outcome. Or that would be my take. Whether or not Peter and team and this is going to be the company that can leave the battery manufacturing space and go into other advanced processes, like, for example, semiconductors, I would probably imagine that would be like opportunity number 2 if they master batteries or something similar. Who knows? But I would guess that the primary objective is to get something really, really big, really, really quickly in the battery space first. And yeah, to Yair's point, having Peter in play, I think is great, but also a strong plus for how to solve some of the challenges that maybe only the West suffer from, but that definitely, I think, exist in battery manufacturing over here.
Yeah, 100%. And I think, that the first kind of fail fast and iterate and then pivot and then do something else. I think it's super great to see that happening in Europe as well. But I'm curious to hear your take, because I think some of the people that have invested probably also think about the next kind of autonomous factory and, the thing that's only run by robots and everything is automated and you don't need people anymore type of thing. Like, do we believe in something like that in the future? Is that going to happen, or will we still need humans as part of the process?
To define the future, Hugo, what's the timeline? We're talking about like the future next 10 years, future next 100. What's your timeline?
Well, actually, that's a great question to you, because how do you see it at different stage across, 5, 10 years, 100 years, right? Like, what does it look like?
Well, I think we've actually got quite a good example of this, which is Tesla. So Tesla tried to fully automate all of their production, cut humans out entirely. And they ultimately concluded that there are certain steps that are just so prohibitively expensive to try and get a robot to do. I think one example is, stuffing, maybe it might mean seats, but kind of like fluffy filler into padded sections of the car, and trying to get a robot to do that, to grapple with kind of, when you can just have, comparatively cheap human, just didn't make any sense. And I think that's a very tangible example of why robots are not going to kind of completely take over manufacturing. I would see a continued increase in automation. I would see a continued increase in the deployment of robots. I have my own questions and uncertainties around whether humanoids specifically are the relevant form factor for a factory setting, but certainly kind of other types of robotics, I definitely see taking increasing market share within manufacturing. So yeah, I would see that trend continuing at its current pace, potentially faster over the next 10 years. And on a 100-year timeline, who knows, perhaps we can get to robots that are so good at human tasks that they are better for everything. We will have to see. That's my own
They
take.
will record the podcast.
They will report, exactly. The
Record.
thoughts, exactly.
We should ask Matthew to do the Terminator test, to just cut his skin quickly, just to make sure he's not already been replaced. I think the Tesla example is a good example. I mean, I was talking to Ben the other day about robotics, and he was making the point, I can't remember the exact stat, but if you just calculate the number of positions that a human hand can make, the dexterity that we have just in the hand is incredibly large. So the number of just movement points that you need to be able to recreate in order to have the same dexterity that we have as humans is in and of itself a massive engineering challenge. And I think we saw the launch of that humanoid bot. I can't remember the name. There's something one. Does anyone remember the name? It launched like a few weeks ago. Like the first humanoid that you can pre-order. And, like that was kind of impressive, but also not so much in terms of like its capabilities. And so I think if that's sort of if we assume that's sort of the bleeding edge today, then I think we have quite a long way. And maybe it is a form factor question, right? Maybe we shouldn't be so focused on humanoids, and maybe we should be looking at other areas. But the manufacturing line today does have a lot of machinery in it, right? It's not like everyone is doing every task. And sometimes I think we talk about like automation, like everyone's just in a factory, hammering the doors of cars together. There is a lot of machinery and stuff already happening, but there is a lot of human intervention. I think that a lot more autonomy will be deployed in the next 2 decades. Whether it ever makes sense to get to a full robotic factory, I think will depend on a lot of factors, including like the technology progression and the relative cost of the robotics versus, human labor in any given geography or setting. But I wouldn't, I can't imagine that in 100 years we'll still have people involved in most of these processes for sure. And I think in the next 2 decades, we will see some step changes towards more and more robotics and automation. Whether it will be fully automated, I'm not sure.
And I think what's one of the interesting case for Aris Machina there is, I think it's not going to replace specifically people in the factory, but rather the analyst, or like the people trying to predict what should we do when that happens type of thing, right? So I think we're going from a world where we had data that said, okay, here's what happened in the factory, to a world where we're saying, here's why it happened and what should we do next. And if software can do that, then maybe the replacement of job is not necessarily of the people that are actually working in the factory, but rather the people kind of giving direction as to what to do. So that would also be super interesting to see, right? Because that's a completely different type of a workforce to replace, I guess.
I think that takes us back to the subject of the session, right? That's what the software layer is hoping to do. And I think something we see a lot with our portco Ali is that the labor challenge in manufacturing is well documented. A lot of people who work in manufacturing are older. A lot of manufacturers struggle to hire highly skilled employees to replace people who are retiring. And one of the main elements of Ali's pitch is around de-risking that loss of expertise, where you're losing that person who knows that slight sound, that slight whirring from that machine means that there's a fault, and being able to automate that with a level of granularity, accuracy, and reliability that the owners of the factories can really trust. And I think that is the orchestration, that is the element that the AI platforms that we're talking about, Aris and Ali, etc., are trying to automate.
It's not 100% clear to me either at the moment whether they're actually looking at doing real-time optimization of stuff and actually looking at adapting the machines in semi-real time. I would assume that's the endpoint that they're working towards, right? But I think that critically what they're trying to do, which seems novel and different, at least in this setting, is to be able to create this global maxima rather than local maxima, and actually have the interoperability of these processes and steps that means you can understand what are the interactions between A, B, and C that gives you the best result that you're looking for across the board. Whereas I think a lot of work has typically been focused on optimizing machine A, then optimizing machine B, and then optimizing machine C. That was a tongue twister. And what they're really looking at doing is to try and get that unified layer. How much of that is then going to ultimately become some sort of real-time optimization versus something that's spat out in terms of recommendations and tests? Unclear from my reading of the situation. But that, I think, in and of itself is a very interesting step forward and a very difficult one to pull off, to be clear, to actually get that unified view across all those processes, steps, disparate data sources, and so on. That is a challenge in and of itself. Arguably the bigger challenge than actually deploying the intelligence on top of it, I would say.
Well, I was going to say, 100%. I think whichever battery factory deploys their software in line first is taking on their actual production line, it's taking substantial risk. I mean, manufacturers are hugely risk averse. That risk aversion only increases as the stakes get higher in terms of the value of the products you're producing. So to go after advanced industries first, i.e. specifically batteries, semiconductors, other types of thin film advanced manufacturing is certainly ambitious, but also to Johnny's point, indicates to me that they probably aren't optimizing too much at the production line level today. It's probably more around linking the different parts of the process together, so to make sure that R&D data is fed into the production line arrangements, and vice versa, the production line data is going back to R&D, and kind of all of this is put in a consolidated global usable format. That's my hunch from looking at the website of probably where they're going to start, rather than at the kind of nanometer scale optimizing machines that are already, as Yair said, in China, running at very high performance.
I see 4 big challenges for any one of those companies in this field of industry generally. Okay. One is it's relatively easy. Nothing is easy, but let's say it's relatively easy to get pilots and LOIs. Okay. And do these things. It's incredibly hard to convert those into scalable ARR. Okay. So this conversion, you should not be mistaken by LOIs. When you look at these companies and they tell you, oh, we have a project based revenue, etc. That is one thing, but real ARR and scalable ARR in this field is extremely difficult. And the second one, which is exactly what Matthew said, uh, the buyers are very fragmented. Okay, they're very different. And you and Johnny, you also said, right? It's each factory is different, each industry is different, which is then the third element is the integration is therefore very hard, because the legacy ERP systems, you need to shut down machines in order to integrate them, so you cannot go downtime or slow. So all these makes the integration and getting into something that is up and running very, very difficult. And then when you are running, the last bit of that is very difficult. It's the ROI proof point is also extremely difficult, because it's not easy to set the baseline that you're improving against it and to show that exactly that your predictive maintenance or whatever signals recognition is the one that led exactly to cost savings.
But you can I just rebound that, and I genuinely love to hear your takes. Is something I'm thinking about, which is the ARR point, and I'm not talking about the conversion, but also the implementation. That is it software or is it consulting, right? Which is the VC kind of smell check, right? If it's consulting business, oh God, run away. If it's software business, yes, lovely, scalable, come here, high gross margins, repeatability, love, love, love. But let's talk about Palantir, because Palantir has what they call forward deployed engineers. Now, what's a forward deployed engineer? In consulting, that's an integration expert, system specialist, right? They're doing consulting with a lot of custom tooling and AI on the back end, but every project that they're doing, to the best of my knowledge, involves some sort of consulting piece of work in order to get that up and running. And Palantir is obviously a wild success story for many different industries. And I do wonder whether sometimes, we're a bit too allergic to the idea of some sort of integration hurdle that maybe feels a bit like a consulting project, but that afterwards turns into software type engagements and software type revenues. And I'm just curious whether you think, is it possible to bypass that sort of forward deployed engineer step? And whether we should be so skeptical about that type of a business model anymore, given the kind of way that Palantir has grown and scaled, even with that being the case. I don't know what you think, Yair or Matthew, but I'd love to hear your thoughts.
And just before that, I think it's a very good comparison. I'm not sure if it's the press or if it's the founder, but there was this comparison between Aris Machina and Palantir somewhere in the press. I'm not sure if it was from the founder itself, so great comparison there.
Yeah, it's actually a topic I have a lot of thoughts about, Johnny, and happy to share. I think you have to look at it from the different perspectives. I think if you look at Palantir's success, they were targeting large, clunky, very large, clunky customers, government, the NHS, that kind of scale of customer. And those kind of customers need a lot of hand-holding to buy, but when they buy, it can be a 9-figure contract. And I think that's the plunge that they took and the early stage investors took. I think, and it worked for them. I think you're absolutely right that most early stage investors are allergic to anything that looks like consulting dressed as SaaS. And I also think there is a gap between how growth stage investors and early stage investors think about this. So when I speak to tier 1 growth stage investors at the B, they're pretty open to a services component. And in fact, speaking specifically about a fund like Insight Partners, I talk to them all the time about the deals they're making. They're quite happy just segmenting a company's revenue. That's the services element. We're going to value that this way. That's the ARR component. We're going to value that this way. And we're really excited about them. We're going to scale both to here. These stage investors, as soon as the services element, often run for the hills. I think the reason for that comes down to the target outcomes they're looking for. A lot of the growth investors are very happy writing a huge check if there's a clear path to a 5x investment. And that's much more achievable with services than it is in the early stages, where you might be trying to underwrite to a 20 or 30x outcome. So I think the where the market is kind of somewhere in between, where early stage investors are hyper allergic to this stuff. Growth stage investors, in my experience, are non allergic to it at all and actually quite like it. And I think companies, if they fit the kind of early stage model, will find it easier to raise early on. Companies that have a service component will find it very challenging early on, often have to bootstrap and then raise growth capital later. Yeah, I think there's some nuance. And the Palantir example is about specifically trying to very hard to unlock customers that have very large revenue potential and doing that with consulting services.
So I would just say that about Palantir, okay? Funnily enough, the company is not reporting this metric. But maybe that is also something interesting in itself. But the estimation, according to the analysts, is that that 90%, about 90%, is recurring revenue, and only 10% is service revenue.
But even I would even challenge the term service revenue, right? Because if I'm a normal SaaS company, most early stage investors will be happy to and encourage me to go burn a lot of cash on CAC, right? And really bump down go aggressively down on my acquisition costs, and then bang, and then I come out on a much steeper slope, right? That's kind of the SaaS 101 playbook, like go down, like use venture to scale that kind of early acquisition costs, and you make it back on your lifetime. What I'd be curious about is in a space like manufacturing, if you needed to have something like a forward deployed engineer, if you needed to have something like a systems integrator that was your go-to-market way of kind of closing a deal, to your point, Yair, from an LOI to an actual ARR for services, to me, that's just a cost of goods sold, right? That doesn't make you a services company or a consulting business. It's not a Facebook ad. It's a human being. But I think that sometimes we're too sensitive at the early stage, to Matthew's point, about anything that smells like a service business. But if that individual or those individuals are really there to actually get each factory onboarded into an ARR contract that is there then going to be software-based recurring revenue like everything else, I think it's an interesting model. And I think I would guess 100%. It's also going to be needed for this space, I would guess.
I did not suggest. I hope I did not suggest
anything.
Oh,
no, not at all. No.
Look, with the time we have left, I'd love to do a very quick kind of investment memo. Aris Machina, what should I be looking at as a junior analyst, right? What are the sections or stuff that I would want to look at if I were to invest in that company? So on the risk side, everyone, what would be the typical thing that you would want to look at to understand if that's a company you would want to invest in?
I can start and say generally, it's not about Aris, okay?
Yeah, of course.
Generally, I always say that I'm interested in every pitch deck only in one slide. And the challenge is that most of the time that slide is in slide number 19, and it's the slide that is done most poorly by entrepreneurs. And that is the competition slide or market analysis slide. Why? Because most often you as a company, you're not innovating in a void. There are other market players in this field. So what is interesting for me to know is where are you playing vis-a-vis those players? Okay, number one. Number two, the challenge with that slide also is that it gives you a snapshot of today. And then it starts with, oh, these guys are doing this feature. We're actually doing that feature. It's completely different. These guys are in the US. We're in Germany. This is completely different geography, yada, yada. Okay? So again, this is just a snapshot of today. But what is interesting more is to see how is this market map going to look like in a few years' time? Because everybody's moving, and people that were your direct competitors today are no longer going to be there. But people who were not on the map, yeah, and where you did not consider as competitors and not direct competitors are moving into the field. So this is when I'm looking at a company, and Aris included, for me, what's interesting to know is how is this market, where is it today and where is it going, and who are the players that are out there.
Interesting. And obviously, you would also add to that your pilot to scale type of analysis as well, right? Because I think that's one of the things you mentioned earlier, yeah, which is like, how do you go from testing something or like having a first pilot project with an industrial all the way through actual ARR revenue, right?
Yeah. And I think on that, I think building on what Yaya is saying, Yaya, you talked to some extent at the start about how sophisticated Chinese manufacturers are at this already. And I think it's public information on Aris Machina's website that they're going after the battery manufacturing industry already today. So I think unlocking traction with the major manufacturers, which are almost entirely dominated or heavily dominated by the Chinese players and going to be increasingly dominated by the Chinese players as well, I think is really important. I would also say, building what Yaya was saying, that in this phase, things like sales cycle and balancing that against ACV is really important. Manufacturers are historically very slow moving, or can be, and particularly when you're trying to sell them foundational software that completely changes how they operate, sales cycles can be a huge pain point. And that's certainly something that I'm sure the team are focused heavily on in terms of what can they sell early to get a foot in the door and then expand from there. I think those are some of the kind of key points. But I think as we look towards the next round, I would be curious where they can go beyond batteries. I'd also be curious to understand more broadly how they're thinking about how deep they go within batteries. Is this more about kind of helping the flow of data from R&D into production, or is this around production optimization? There's a lot of questions I'd have for the team, which I'm excited to find out at the next round.
I think on the idea of competition in general, generally speaking, I agree that N of one type companies where there is something so substantially different or so substantially new that is almost a category creator, I think they're easier to build conviction in, to build conviction that there could be an outlier success in, and to ultimately feel good about them being one of your bets. And part of the reason for that is because in most cases also the investors that they're going to meet have less proxies and less competition themselves to invest in that type of play. And that's also an important point. If investors are seeing 20, 30, 40, 50 companies, even if they're different flavors of ice cream, the investor is ultimately going to probably make some sort of gut check call on which flavor of ice cream they think is best. And often, it's going to be more subjective than we'd like to think. And it's very hard to preordain or to guess which of the companies is actually going to be the winner in that space. In N of one or N of around one type plays, it's more a yes/no decision, right? Do we believe this is going to be a big potential? Do we believe this is going to work? If the answer to those two things is yes, then we probably should try and make a bet on this company, because if not, we're not necessarily going to see another one like that. And so I think the abundance of choice or the illusion of choice makes it more difficult for founders to raise against, because they are inevitably compared against feature stacks, against strategy, against quality of team, against all these different things. Yaya mentioned earlier, why have they raised so much money? Peter Carlsson. That's also a big point, is when you do have a number of companies in the space, when you do have a number of people trying to do something similar, team should always be number one, especially in the early stage. But it's going to be even more important when there's multiple different potential solutions that you can pick from. I think on the Aris case specifically, the thing that I would be super curious about is what's the conviction you can build on their ability to build this homogeneous ontology that sits across the factory, because that really is the key unlock. Once you have that, deploying stuff on top of it to solve for specific local and global problems becomes a lot simpler. I think the real key unlock and the real key challenge in using AI to optimize the manufacturing process is how do you take this heterogeneous, complicated, difficult, specialized, unique almost environment and make it intelligible across a singular layer that you can then build intelligence on top of, which can then make the whole thing better. That for me would be the single biggest defining factor in the whole manufacturing AI piece.
Love that. And then if we just to finish on that, so like if you go on the things that are, catch your attention or like makes you excited about the company or in general about AI for manufacturing, I think for Aris Machina, we mentioned it a few times, but like the founding team, really good experience within that industry. Peter is obviously quite a superstar in Europe and he's co-founder as well. I think the growing spend in IT expenses for manufacturers is also something interesting for me. But what are some of the other elements that would get you excited about a deal in AI for manufacturing?
I think at this stage for us, it would be about do we feel like to the point about competition, do we feel like we've identified something where there is enough space that there is a moat that can be built, and is that moat valuable if it's created? Right. So this is a bloody space. There are a lot of people coming in. The barrier to entry is ostensibly quite low because we're talking about software and AI and kind of very buzzy hot topics at the moment. So everyone's looking at this as a potential problem space. So the question is, can you find something, either a sector, a problem, an area, and can you attack it in a way where you can build conviction that there's enough breathing room, there's enough space to be different, that when the dominoes start falling and, that we have the inevitable clear out of the ones that didn't work, we start having the acquisitions, the fire sales, all this kind of stuff that's inevitably going to happen when there's a lot of entrance into a space. You believe that particular play or approach has built enough moat and enough defensibility and enough traction to be one of the winners that remains and have some sort of venture scale outcome at the end of the day.
Yeah, I would just echo. I think the founder market fit here is outstanding. This is a team who have spent a lot of time in this industry, who know this industry really well. They're also very experienced startup operators, very experienced at fundraising. I've a lot of confidence they wouldn't go after an opportunity they didn't believe was not just venture scale, but has the potential to be a very large outcome. And I think they know the market better than almost anyone else in Europe. So I think that combination is inherently exciting. I think a lot of the conversation that we've had today is based off passing conversations with the team and publicly available information. There's a lot of guesswork, but I'm really excited to get into the next level of detail to understand exactly what they're trying to do. But given that founder market fit, I'm more optimistic than I usually am that they're attacking an opportunity that's really exciting. So looking forward to learning more.
Yeah, you have something to say for last word?
On what?
On that particular topic, what would get you excited?
No, I think I agree with what Johnny said, right? I mean, if you're getting excited when you see something that is different. We see so many things and every day, and you're getting excited when you see something that is new combined with a stellar team. That gets me excited.
Love that. Well, thank you for today. One of the thing I should have mentioned earlier today is that I'm actually having Sid, so he goes by Sid, one of the co-founder of Aris Machina, on the podcast next week. So, guys, feel free to share some questions ahead of that interview. We'll try to answer a few questions that we had today. But anyhow, thank you so much for today. It was a pleasure. And then, all the best to Aris Machina and AI for manufacturing. I think there's a lot of work to be done.